here. Well, where would have been your second entry? Well, looking at our trend in terms of entries, we have a pullback. This is beautiful. This right here is a beautiful setup. And why is it a beautiful setup? Because we get a pullback. We're not dropping, we're not breaking the trend. This is a healthy pullback that, we can call it a little mini bull flag. It's pulling back, it's making this little, kind of channel, slanted channel. And if you know some of your patterns, or you should, that is what we can constitute as a bull flag. So once we have this pullback and hold of the trend line still, well, guess what? If you missed that initial entry here, this would have been your second opportunity to get into the trade and make some money. And again, as long as we continue with price holding above where previous price started to make that move upward, I'm going to hold that trade. I'm not going to get out of the trade. Now, if I'm looking at this and I got in here, well, my stop loss is not going to be all the way down here, because God forbid we do break that trend. I don't want to hold all the way back down to where I initially started in pre-market, because then I'm going to be in the red big time. My stop loss, if I would have entered this trade, would have been right around the break of this new continuation that was happening. So it would be right around here if I'm entering on that second move after the retest. Now, that is my new stop loss. If we break below 67.85, usually I'll give myself maybe 10, 15 cents, because the only reason I'm saying that from where that line is, a little bit more wiggle room, is that the market makers do like to shake you out. And sometimes if that's where you're putting your trend or your stop loss, I actually don't use hard stop losses. I use a mental stop loss based on the trends that I'm putting here. I'll maybe hold out another 10, 15 cents right around here if it constitutes it, where the wicks are. But this more or less gives me a ballpark idea that, hey, if price starts to retrace around 67.85, we need to hold that. If we start to break that, then I have to start asking myself, is the trend still valid, or are we starting to reverse and do something that it's against the trend? But if that does not happen, in this case right here, when we get this pullback with the red candle, some people would freak out and probably start to decide whether they should be selling. But I myself would just stay in that trend and hold the position, because I'm saying, hey, there is not enough information here that would constitute for me to cut this play. Let me continue to hold. Now we start to break here. We start to get some aggressive candle momentum to the downside. Now that's where I would say, okay, I need to potentially start to accept that what I initially thought was happening is no longer there. The trend has been broken, and now I have to go ahead and exit out of this position. And that's pretty much it, guys, on my thoughts on how to trade that specific setup. For PayPal, I'm also going to go over Tesla and what I saw and why I took that trade, and then BABA. But I would like to make a moment and pause and ask if any of you guys have any questions or concerns when you enter a position, what you're feeling, what you're thinking, and what challenges you may have. If you have a particular chart that you decided to take personally that you want me to look at and kind of ballpark it for you on what you felt you were seeing versus what actually happened, I'm glad to help. So I'm open for some questions. Anybody? You guys there?
I think it's pretty cut and dry what you said. I'm working out, but I'm listening and watching. But I liked how you set it all up. I didn't take the trade personally, but it was definitely a good trade for sure.
Okay. Yeah, I just want to make sure, because this is your time, so, no question is a dumb question. And I know sometimes it's a bit, scary to ask something and then be seen as you don't know what you're talking about. We've all been there. I'm not saying that's the case with you, but I just want to make sure that you guys have that, you have the floor, so there is something that you're struggling with on the whys, you either would hold a position, get out of a position, what it is that you're not really seeing when you're entering the trade. That's what we're here for. We want to go ahead and answer those questions, analyze the charts, dissect it, so you guys can be better traders and be more emotionally and mentally prepared, because this is the most important thing. You can have the best TA in the world, and this is something that I can share, and not something that I can write down on the charts. If you're easily manipulated by what is happening on the chart, then you're going to be easily pushed out of a position. And that is why you have to visually understand what it is you're seeing, because all these candles are sharing information on who are the buyers and who are the sellers, one, and what are the most interesting areas where buyers and sellers are positioned at. And if you understand that language, which that is what candlesticks are, it's a language of money, where it's being moved into and where it's being moved out of, you'll have a better grasp on your emotions to be able to position yourself into a winning trade and not to get you pushed out of that trade, you know? And that's very important, is your mindset, your emotions, because you can have all the best TA in the world, but if you're easily manipulated, you'll always go against what you know you're seeing because you're being provoked by your emotions. So let's move on to BABA. And I'm going to go first into the one-day chart. And again, excuse all my lines. These are based on different time frames and stuff like that. So BABA pre-market had a gap down. And I love that. Just so you guys know, there's two things you have to understand about gaps. One, gaps usually get filled at a later time, depending on the time frame. So maybe not today, maybe not tomorrow, maybe in a week or two from now, because it's based on the higher time frame. This is something that I'm definitely going to keep an eye on, is the zone between 89 to roughly 92. At some point in time, once the buyers feel that there's a price point that is sufficient for them to go ahead and start loading up on BABA on the bullish side, this gap will get filled. And I love that setup. But with that said, whether it's to the upside or whether it's to the downside, usually when you have an aggressive push down or up, that will continue on market open if it's happening pre-market. And that's exactly what we saw when we got into BABA. So seeing this position here on the higher time frames and seeing that pre-market relative to the rest of the market, it was weak to the downside. I said, okay, it's a no-brainer. I'm not going to play BABA to the upside. I'm playing BABA to the downside. That's where the strength is. It's on the seller side, not on the buyer side. So again, having a game plan, pre-market. So I went ahead now and looked at my 1 hour, and this is top-down analysis, whatever you want to call it. But I am looking at different time frames to see the different reaction of the candles, to see where my potential levels of importance are. And now we go into the 1 hour. So we go into the 1 hour right here. This is pre-market. Well, if you guys know your candlesticks, or hopefully you should know your candlesticks, let me go ahead and get this box and identify that. That is a gravestone doji. Gravestone doji is a reverse of a dragonfly, which would be bullish. It's pretty much an aggressive doji that is more of a decisive decision versus indecision, because a lot of people relate dojis to indecision. But in this case, it's more decisive. It's saying, hey, the sellers are here. We're not allowing price, based on my previous history, to go back to retest 94 or 92. We're rejecting that. We don't believe the value is there. So we're going to go ahead and start to drive price downward. So if we look at Friday's price action, what happened? Friday, they tried to push and break above the 94, 95, failed, retested, and held this micro support. And I say micro because it's based on Thursday and Friday pretty much, where it bounced and pushed up around 91 and failed to hold, and then we gapped down. And then we created this gravestone doji. That, to me, gap down, gravestone doji, we're not able to continue and knock out previous price action from Friday, which is something you also have to keep in mind, that for price to be bullish for me, that means BABA would have had to open up close to or nearing the break of Friday's failure. Didn't get that. This is, again, looking back at your history. History tells us that Friday, we really wanted that 94.60 area. We failed and started to pull back. Well, for me to be very bullish on BABA, we need to start going back to that level and break it for continuation. We had none of that. And based on that, with the Greystone Doji or an reversed Dragonfly, I said to myself, relative strength is to the downside. And did we get some pullback? Yeah, right here. We see the wick. We see buyers start to step in right there, potentially, or it could be a fake out and want to push price back up, but we failed. If I now go to my lower time frames where I'm trading, which was the 10 and 15 minutes, let's look at where that's at with the arrow. What am I looking for? What kind of patterns? Well, I'm not going to go just into the trade right away, but right here, we get this aggressive push down. That to me tells me, with confluence with the Greystone Doji, that sellers are dominating. Remember, bigger candles, stronger candles, as long as it's not like a falling knife, means that the sellers are in control, not the buyers. This is the beginning of what was already happening pre-market. So looking at this pattern, I already understood that this was worth holding on to. Now, I went ahead and got into this position right at open, a little bit right at open, and we do get this candle formation of what wants to be a hammer or bullish, pin bar. Fake out. For my experience, the way I would take it is unless the next candle over takes out the previous master candle, which would have been this that initiated that drop downward, we're still in a downward momentum. So people, what happens is sometimes, and this is just my thinking, the smart money will make this push to the upside to trap more buyers before they go ahead and push it lower. So in this case, we get what we would say, okay, this is bullish now. We stopped going down. We're starting to reverse. Well, yes and no. You never want to just jump into something without having multiple confirmations on that continuation to the upside. In this case, once we get this green candle, what happens next is we get the next candle, which fails to push higher and stays within the level of the master candle and what we would constitute as potentially a bullish candle trying to reverse now to the upside. Still would hold my position. We're not up, we're not down. This is where people get shaked out. As long as I'm at within a range of where the previous candle was, and we haven't broken above 89 to reclaim previously what started that downtrend, I'm going to hold my position. I'm not going to get out of the trade. So I went ahead and continued to hold. And guess what? We start getting that next candle over and understanding body language of a candle. Well, now we start to take out not only the master candle, but we now start to slowly take out the previous two candles. And once that third candle hits right here, we're done. We're out. We broke that structure. We're to the downside fully, and we're in that now downward momentum. Now, let's say again, you happen to have missed the initial move that I called out. This is where you need to understand what you're looking for a good entry and why. Well, again, trend is your friend. Nothing overcomplicated. You guys don't have to overcomplicate things. Make it simple. I'm going to go ahead and draw a trend line to where initiated right here. And initially, when you see this trend, you go, okay, well, metrics said the trend's your friend. We're breaking that trend now. Yes and no. This is where they get you. Again, drawing and seeing with what I look at is the overall picture. And what I am seeing here, let me get a line, is this previous candle is starting to line up with this breakage over here. So again, something that supports both a yin to its yang, in other words, that could be a support and a resistance, would be right around here. So even though initially, yes, I would probably be a little nervous if I'm first starting to do something like this and I've never done it before. But what I have to understand is, where is the line of that is drawn out, like the sand in the line? Where is that exchange between the equilibrium where it was support, now it's resistance? Well, it's right around 88.21. For this to be truly a bullish reversal, I have to understand that though this is attempting to break the trend downward, I have to make price action go above and hold 88.21. If we fail to break above and hold 88.21, then it's telling me, it's communicating that the strength in the buyers, though they want to change the trend from the downside to the upside, is failing to do so. And then secondly, we have rejections of the wick of this price point. And then we have this spinning top doji, which is kind of indecision. It's neither for or against the downside or the upside. We get another attempt to push upward. And again, we see rejection from the sellers and say, hey, no, we're not wanting price to go higher right now. We want the continuation to happen. Boom. This is now where I would potentially get interested after multiple rejections here, the doji, which is like a neutral, and then here, of potentially entering this trade. Now we see weakness on the buyer side because we have the wick on the bottom with a small body, no strength to push up higher. You know what? I might want to pull the trigger. Lastly, we have what potentially will constitute, and I would say potentially because nothing is guaranteed, guys. You got to remember, any pattern that I give out, I'm giving out for a reason because this is what I'm seeing. But I also keep in the back of my head, it's not as easy as 1, 2, 3 and say, well, I see this pattern, it's 100% going to play out. No pattern's 100%. All you can do is use that information that the charts are providing you, again, to position yourself in the most successful potential trade. So looking at what I'm seeing, failure to break above the resistance that we've created here on the downward momentum, the rejection of the wicks, and a potential bear flag that has been formed, has all the confluences that would constitute, for me, that's a bear flag, to want to re-enter this position if you missed the first call out that I gave. And that would be my entry. Right here where the arrow is, right here where we start to get exhaustion from the upside momentum, tried to push it back up, I would enter here. Where would be my stop loss? Well, my stop loss, I'm a little bit risque. Don't say, I don't recommend everybody to do what I do, but I would probably keep it a little bit above this wick right here, around maybe above 88.60 or something. If we start to break above that and we start to see more strength in body formation of the candles that we're seeing, then I'm out. But as long as we keep below that, I'm a player. So we never get that. We get a beautiful, clean break of what is now confirmed as a bear flag, and we have continuation to the downside. And look at this, so you understand what I mean to look at the overall price action. Where does price ultimately go? Well, I know you guys see this happen a lot with Boyce when he says, well, where the implied move is, and I learned actually this from him. I always thought it was like magic when he would do it. And, he was gracious enough to teach us, and now we're teaching you. You take more or less, and it's never going to be exact, but you take more or less the width of where the price action was consolidating before we broke down to get an implied move on where it could potentially go. And it's never going to be 100%, but look, if we do this and we see where the breakage is, we can't make this shit up. Can't make it up. Look exactly where price retraced this back to. Come on, man. There you go. You want to know where price is potentially going to go? What the most you're going to get out of this move? There it is. Exactly where it broke, exactly the line width of where price was consolidating is what I use to get more or less the implied move to the downside. Anything more than that, if you're choosing to still hold, well, you run the risk. Sorry about that. You run the risk of potentially now seeing a reversal, which we see here. Because, you know, you get into the trade, you got a good entry, right before it broke down with a good contract selection. You're up maybe 20, 30% on this little move to the downside if you're doing weeklies and something at the money or in the money. But you now get greedy. You're like, oh, it's going to go further. Well, you have to take into consideration what this here is telling you in terms of the implied move, that more likely than not, that's the max move we're going to get for right now. And that's exactly what happens. Once we get that implied move, we start to slow down to the downside. We get another spinning top. Now that is bullish right here. And we start to reverse the trend. And here would have been a nice little bounce play if you got an in-the-money contract weekly to the upside. We hold. We don't break below any further. And now we can go ahead and run this bad boy up to where? Well, guess what, guys? Right where it rejected and retested. You can't make this shit up. Exactly where price was rejection and failed to break above is where the market makers went ahead and took this price action. And then afterwards, we just literally consolidated to the sideways action until we finally broke above. So as long as you got a good entry here, let's say you got here on the second candle, not the first, but the second. You literally had no reason to sell unless we broke, if we were doing the upside play, unless we broke around here. And here you want to have a tighter stop loss just because the risk, the profitability that you made initially from the other move probably wasn't a lot. So now if you want to take a third play at it, you don't really have a lot of meat on the bone here. The difference between the 87.78 to the 87.37 is more or less like a 40-cent move. So here you would have to have a top stop loss. This is where you definitely don't want to have a wide stop loss. So anything breaking below this, I'm out. But it never happened. We literally just ranged to the side, tested here again, that trend that we felt, that resistance that we had here during the trend downward. And then we finally got the pop up and broke out. And guess where price stopped? Guess where price stopped? Well, again, looking at your previous candles, price literally stopped right here on this candle where it previously was initiating that third push downward. And that's where you have to look at the overall picture. A lot of you guys, when you're trading, you're doing this. You're trading 2 or 3 candles and you're freaking out because you're looking at 1-2 candle move without understanding the overall picture. The overall picture, it's going to paint the whole compass of what it is you're seeing to the upside and the downside. But if you're zooming in, and I'm guilty of that when I started, that's why I'm saying it, you're going to do yourself a lot of disservice because you're not understanding the whole compass of the overall picture of where those key levels are when you're day trading, scalping, swing trading. Again, this is what I see, how I trade, and hopefully it's helpful for you. If you have, again, any questions, I'm pausing, opening the floor for you guys. All right, guys. Well, if nobody has any questions, I'm going to do one more in case there were people that didn't initially get to see it from the beginning with PayPal or with Baba, and it's going to be Tesla. And this one, I'm going to be honest, I paper-handed this one. I'm not perfect, but I paper-handed it. I took a small win, but my God, what a monstrous move. Monstrous move. Look at that. Beautiful, beautiful play to the upside. And I called this out pre-market, called it out market open. I said, buy the open Tesla. And there is a mixture of things on why I got this position, right? So first, let's go to the 1 hour. Well, breaking news, and you should always be looking at your news. And I know there's some people that say don't trade the news. News is bogus. But in this case, the news was very bullish. And what I mean by that is, as some of you that have been following Tesla updates, a lot more companies are open to the idea of signing a contract agreement to use Tesla charging stations for their EVs instead of third-party companies, other third-party companies. Well, guess what? If you think about it, it's like what Rockefeller was to American oil. And if a lot of you guys don't know your history, American Oil, which was founded by the Rockefellers back in the days, is what ExxonMobil is today, Shell Station is today, because what happened is back in the 1900s, it became a super monopoly. They gobbled up all the competition, and it was American Oil, if I'm not mistaken. And today we know that as Shell, ExxonMobil, and all that stuff, because it was broken into multiple different companies because the government felt that it was too big of a monopoly. So I'm kind of seeing that with EV. If EV does take off and continues to be adopted into society, and being that Musk has been in the front of that technology and evolution, he might become the EV of charging stations of Rockefeller, the Rockefeller of EV charging stations, which will bring more money into the company, and where he may not be making as much with his car manufacturing side of business, he's going to be making a killing with his EV side of the business and his batteries and all that. So pretty much what I saw here was a lot of strength to the upside, and understanding again what we saw previously, again, what we saw on Friday. So here, Friday, we saw this failure of 261. And then, we get this pushback drop and hold around the 255. And if I'm not mistaken, last week I had mentioned something around, if we hold above the 250 zone, I'm still a buyer. If we break below the 250 zone, then I'll probably be a seller. And this is exactly what we got. We got this test of the 261, pull back to the 255s, held, and then going into pre-market, we start slowly seeing this bullish momentum because the news is coming out that other EV companies are willing to go ahead and accept making a contract with Musk's charging stations to be able to have access to their charging stations. I said, you know what? That's some very bullish news. We're holding these levels, but I don't want to be a player in the call still until we break above this 261. Well, guess what? Pre-market, what do? We have a massive break, blowing out the 261, going into above around 265 zone, and then I'm like, oh, wow, okay. Now we're really starting to show some strength to the buyer side. So let's go to the lower time frames. And right around here, 930, we have that aggressive push up. Now, a lot of people right off the bat would want to get in this massive, green candle. And hey, I've been there. And then I get caught up with what? A pullback. So you want to be very, very careful when you see this very aggressive move to the upside initially at open. More likely than not, my experience, this is me sharing knowledge, is we get a pullback. They get all this push, they sell. People get trapped here in the top because they didn't get the move right away. They probably got on the second candle, and then boom, we drop all the way back down to where the breakout happened on 261. This is the retest. This would be the best entries, the retest. So if we get a retest at open where it broke out pre-market, then that's where I would definitely be a buyer, not here at this initial push up, because more likely than not, what's going to happen is they're going to trap you with expensive contracts at the top. They're going to sell. You're going to be bag holding and then losing money. And then you're either going to have to average down, or you're going to get freaked out and pretty much sell your position at a loss if you don't understand what levels you're looking for. In this case, let's say I did get a bad entry. I got emotional. I said, I don't want to move up. This thing is massive. It's been moving pre-market. I saw this massive green candle at open. I get in, and then I get the pullback. Well, I'm not selling unless we break below 260. If we break below 260, 261, then I'm out. I accept that I got a bad entry and that I position myself into a losing trade if I'm day trading. If I was swing trading, completely different concept. If I have time on my hands, that's not going to freak me out. I'm holding. But in this case, if I'm day trading and I got a bad entry, as long as I stay within 260, 261, being that Tesla proves that can move $10, $15 on a given day when it has very good news, I'm going to hold. So that would have been a position for me to hold if I got a bad entry. And if I got a good entry, well, guess what? This is a perfect example of what a good entry would be. And I will go ahead and enter this position. And as long as we can break that market open high, which is right around here, and the rejection is right around here, so it's around 265-ish, 266, that I'm going to hold that position. So we start nearing, and again, this is where you have to look at the overall dynamics of your candles. No one trend is just going to go completely up. There's going to be pullbacks during that push up or that push down. So as long as when I enter here, if I got this really good entry, I have to keep in mind, one, Alex, metric, you have to make sure that we break above this, because if we get an aggressive rejection of the high point, you got to get out and secure some profit. So if I have multiple contracts, we start to near this 266, I'm going to go ahead and secure some profits and trim. And now I have to keep in the back of my head that if we're failing to break what we already rejected once, I most likely need to get out. But during the process of that trade moving upward, even when we had these pullbacks of red candles, none of these red candles were lower than the previous. Each one was a little bit higher than the previous one. It's never going to be obvious, but if you look very closely, each one was a little bit higher than the previous candle. So there is no reason that would constitute for me to get out of this trade. And again, trend is your friend. Well, the trend right here from the bouncing, it's retesting that trend. It's not breaking it. And then we get that massive aggressive push upward. And then the rest is history. We just keep flying, baby, and keep flying. Unfortunately, I sold around 265. So I can't complain. It was still a good move. But, you know, I was trying to play it safe just in case we did reverse. Because at one point, SPY was doing the opposite of Tesla, which usually they're kind of in sync. So when I saw SPY was doing the opposite, I'm like, Tesla's running still. I don't know if this is a fake out or it's going to continue to run. So let me play it safe and let me get out of it. But you know what? Tesla had its own mind today, and it just continued and continued and continued and had a 13+ move today. You know, but who would have known, right? But that's Tesla for you. You bet against Elon, you're most likely going to lose money. But anyway, guys, that is how I trade, how I would set up entries and exits, what I'm looking for and the whys behind it. Again, before I wrap it up, anyone has any questions about what I explained, any doubts, concerns, confusion? If not, then I appreciate the time that you guys made to come out and listen to what I had to share. And I hope some of this information will help you be a better trader and see things a little bit more clearly. All right, guys. Well, I appreciate your time. Call it a wrap. See you.
Thanks. Appreciate you.
Not a problem.
Thank you,
brother.
Merritt. Appreciate it.
You guys. You have a great night, guys. Thank you so much. I'm out.